I thought what I'd do following last week and looking at gold in terms of how that traded and how you could stay in a move, what you were looking for on a move. And what we're going to look at this time is when a trade doesn't do what you're looking for. Not about necessarily what you're going to do about it, but more about the indication that this is not the time to take the trade that you're thinking about. And this is one that came up in oil last week. Now, what we got with oil, and I'll talk about here in particular, finding your access point. With oil, you've got a situation of some bad lows. So we'll come on to that in terms of what exactly you're looking for there. But then also, how can you find an access point? With the gold one we looked at, you had quite a clear access point. It was to sell it through the low. Now with oil, the situation we got was some poor lows, so you knew where your access point was. You knew that at a certain point you were expecting it to accelerate to the downside. But what you can also do, and this is where when you're planning out a trade, so the sort of wider context trade, actually look in more detail and find out where else this trade could be accessed. So I'm going to go into that. What else are you looking for? Could you be accessing this trade earlier? So when you get a situation, let's say like these bad lows in oil, what happened when you moved away from that low? Was there any point in this move, for example, that may well give you some kind of earlier access? How was this move created? How was the reversal away from the bad low that's down here? How was that created? Because this gives you a sense as to where different participants interacted and at what point the scope or context of the market is going to change. You're still then falling back onto your access point, which is exactly the same as last week. What do you need to see change price action wise when you get back there? And also, how are you expecting this trade to be entered? Now this oil one's going to be slightly different. With the gold one, the aim of that trade last week was to be aggressive on your entry, and as long as it didn't come back past that little zone of risk, you could add on. Whereas this oil one, what you're looking for is to be adding as it goes, as opposed to be trying to get in a certain area, because in this situation, you've got an earlier access point, meaning that your main access, these bad lows, you could be in from up here. And so you're then adding as you get more and more confirmation. So this is the bit about once you found your earlier access, how is it going to move from this access point to the point that is the sort of main access, but is also the confirmation that you are right from here. And how do you manage that? Because if you stay sold it here, looking for the break of lows, until you get down to and break the lows, you don't actually have any confirmation of this trade being right. So what are you expecting to happen in here is going to help you out. So this is the oil trade that we're looking at. This was on the 14th of August, so on the old contract, bear in mind. So the levels don't stack up to where you're looking currently. We're on the old contract. And what we've got down here is a couple of bad lows indicating that the auction has been stopped. So this is an incomplete auction. We've not got any kind of tail like you see up here that would indicate that buyers have run out. So instead, you've got some bad lows. You've also, on this day over here, got a ledge. So whilst you don't have a bad low, you've got a ledge being formed on the back of this very early move up, and then we fall back onto this same area, and that creates your bad lows. They all come in around about the 41.48 up towards 41.52 area. So this is the zone that you're expecting to break. Now, what you need to start looking at is, last time we were down there, how did we move away, and does this give you an opportunity to get in at a better point so that you're already in when you get down to these lows on the expectation if you get there, this could be a move a little bit like the gold one that we looked at last week. So it's a different type of trade. So this is where you need to do a little bit of digging. At the moment, you've got an access point. You've got a point where something should happen. Bring it down onto a shorter time frame and go and actually have a look, not at where the potential trade is, but also then on what happened from there. Now, you can see that spike down, low, low, which creates the ledge. You've then got test down into the same zone down here. That creates your other bad low. What happens from there? Well, what happens from there is we form this flag, which is going to be participants looking to sell for this next leg towards the downside. And they don't get it. You then get this liquidation, and that comes above 41.80. So this is basically the point where the buyers took control, and you can see that as well from the volume. Very, very little by way of trade. So this is showing you that basically buyers came in and just bought it straight through those prices. So now you're starting to get a clearer sense as to where exactly you can be looking to get into this to be in before we get to these lows. And if we manage to get in below 41.80, you're going to be 30 ticks on side by the time you get to the point where this can accelerate. So going into this in a little bit more detail, and this is bringing it right the way down then onto a 5-minute chart. And what you've seen here is, and this is that flag formed on a shorter time frame, buyers take control, and they take control from 41.80. You see that volume picks up, and the volume starts to pick up just before. Delta picks up. That's the liquidation of the shorts, which leaves you this quite distinct point of low volume. You've got a low just here at 86. But it's the point that the buyers took control that matters. As long as we can get through there, that's showing you that buyers are no longer in this market. So what you want to see is when you get down here, if you don't see buyers coming back, this is what's going to say to you, yes, you can go for this. But the expectation also, and this is the side of what's going to happen before you reach that bad low, reach that point where you can expect that continuation, that faster liquidation type move, similar to what we looked at last week, is we've got multiple short-term lows. So what you could be looking at on a trade like this is once you get below 80, you're then looking on this move down to see continued pressure into each of these lows. You don't want to see any buying coming in at any of them, and you want to see that essentially anyone who thought these were good prices no longer does. So that's the side of the trade that you want to see. You want to see it as it goes through 80. That's your tricky part. Could buyers come back at the point that buyers took control previous? If they don't, then you're expecting this to just push and push and push through. And at each point that you don't find any more buyers, that's where you can add on to this. So it gives you a chance to then add all the way into the level, meaning that you can increase size over these 30 ticks. And then once it breaks 50, 48 area, you can then be in on the trade and waiting with the expectancy that this is going to accelerate to the downside. So, what ends up happening? The trade doesn't materialize. What you end up with is at the point where you're looking for buyers to disappear, they don't. They come in. So we get this quick little run through 41.86, so through the lows that you'd established that morning. Quick little push down. I'll bring the ladder up of this here and show you exactly how this plays out. I'll play it on extra speed because this is quite a slow burning move. But here we go, you're getting down towards 86. So this is the first place you want to see some selling coming in, and it comes in nice and easy. Through 86, a little bit of washback. He's getting these larger orders sitting either side. Bear in mind we're into rollover as well. So you do get a few sort of more anomalous type orders coming in. But at this point, you're looking at this thinking, okay, down to 80, what's going to happen here? Can we find some buyers or not? And what you don't want to see is buyers here. You want to see it get down here and you want to see some selling coming in. So all looking okay now. A little bit of low volume. We push through 80. We are finding a little bit of buying because it's not pushing on, and you see there 230 done at 79. We move back up towards 81, 82. At this point, you're still okay. We're still seeing that there is selling taking on the buyers, so that's all right. But ideally, you want to see these buyers getting out of the way. You don't want to see them coming in and defending this, and that's then your confirmation that this is working. If those buyers disappear, then you can start looking for that move down and the taking out of those lows. But at the moment, you do have buyers coming in quite clearly. We've done 400 lots at 79. We've done around about the same at 80. This is an indication that buyers are coming and holding this here. So if you're short, you've not really seen what you've wanted. You've seen people stopping the move, which is at exactly the point where you'd want to see them getting out of the way. So that side of it, not ideal. But if you're in from here, there's nothing saying to you, you must get out right away. And this is why if you're adding as it goes, i.e. once you start taking out those other areas of no buyers, you're not taking on a huge risk here. 86 was the point that we accelerated down, so you can have your stop above there. So you're taking on around about an 8-9 tick stop, but bear in mind, you're going to be 30 ticks on side before you even get the breakout in this situation. So the risk on the trade is quite valid. But the way it's trading here does not look good for this. Way too much volume done down here. At the point where buyers should be disappearing, they're very clearly coming back in. And this is now providing you absorption. This is suggesting that buyers aren't being scared away by this new selling pressure. And so therefore, any reversal away from this zone is a pretty clear sign that it doesn't want to go through there. And since then, we tested back, we broke, and then found more buying down at 65. We've also been there a couple of days later as well and found more buying down at 80. Obviously, new contract, these prices change, so have a look at where that little triangle plays out on a new contract. But this is quite clearly showing you that the buyer hasn't given up. That bad low is still a trade, potentially. But currently, until you can get rid of the buyers that are coming in down here, this isn't going to play out. And so that's your situation where whilst you had a trade that potentially gave you an early access, the access was not available. This is all very clearly shown up from the order flow, and it's so important that at your access points, you need to see the necessary order flow. And when you don't want to be staying in that trade long. So a little bit of a change from last week where we got what you wanted to see, but there's no point in always focusing on when it works. You've also got to be very aware of when it doesn't. And you can see now, this is on triple speed and the energy feels very, very low here. Not what you want to see for a breakout.